Okay, let's continue to discuss this paper. CEO social capital and litigation risk. This is a short article published in Finance Research Letters. But I think the topic is quite interesting. So I picked this one because it's next week is midterm, so you don't need to read a long paper. So we can pick a short paper and to know a lot of knowledge about social capital CEO and the litigation risk. And first of all, today we have 4 questions, answers in the last section. And now we have a 3-slide poll, and the data was examined the Chinese case. So our motivation on this paper is why litigation risk and the CEO social capital matters. We have to know that after the class. And what's the research questions and the hypothesis, and we have to combine all the results with the mechanism. Okay, recently, every paper you submit to the journal, the journal editor will require to describe one channel. So this is what they say mechanism. So sometimes the mechanism and the channels you are describing, but you did not examine. So your group answered the questions, right? So the channel or the mechanism you pick, like a high CEO ownership and high independent directors, that's belong to corporate governance heterogeneity test. So it could belong to another mechanism because they do a lot to further, not baseline, they do or further exploring. So this is the mechanism. But some paper does not have a mechanism. They are doing some baseline and then to conclude based on the theoretical background only. So like the first one, they say reputation, no channel, right? And then they say that these resources, information, this is theoretical base channel 2. So the first 2 in this article, they only talking about the theoretical base, but not supported with further evidence. Only the high ownership, CEO high ownership, and the independent director, they provide further details. So this is one channel because they mentioned this and they do further. So we have to have a very structured brain when you read the paper, and then you will not get misleading. So data sample, empirical model, finding, and heterogeneity. This is quite important because this is not baseline. Baseline model in table 3, right? And other than that, they do a lot of heterogeneous separate into the sample, into this, that, and do some robustness test, finally, and get the same result. And I will provide some comment and improvement for the paper. First of all, let me ask you, which company are you interested in knowing more about the firm's CEO real net worth size? Tell me the firm's name. Which CEO, which company are you really interested in know further about their net worth size? Which company? We can pick like a 3 or 4. And if I have data, I will show you each year. Facebook. Okay. And then you. Huh? Google. Indian. Right, okay. And then you. 陈博言。Huh? Which one? Oh, Amazon. Okay, Amazon. Okay. And then finally, you. Pick another one, huh? Oh, Microsoft. Okay. We have some overlapping, but I probably missed some. Okay, let's take a look at, I guess you will ask me like a Apple. So I prepare Apple first. Okay. Curiosity about CEO social capital actually focus on their network size, but calculation by different formula and different way. And Tim Cook, this is the most recent I can find, 2025 September 1. They have 6,000. So this is not the status. You find the LinkedIn or find the Facebook, how many followers the CEO have is different one. If they follower or they have a more connection in LinkedIn, that much more than that. So this is not the same way they calculate the network size. Network size have to be very defined, very strictly about how many directors you serve as the same time as the others. Like I have 10 directors on the same time as another one, then your connection is 10 only. And your university alumni at the same place, maybe you're 13, you have 13 because you register the same class. Then this is a network, right? Very direct. You're following something, you like something, or you just present something is not network size. Because if we count it that way, thousands of thousands will be included, but with no impact. So only 6,000. And you can see the others, no more than 10,000 too. Okay, so this is their compensation per year. So this is 1,000. In unit, it's thousands. So it's Tim Cook, the total direct compensation. Indirect, I don't know, because it might be secret. And the second company I will show you, Amazon. Right? You ask Amazon. I have curiosity too. So ticker Amazon, and the most recent data I can access is 2025, 2024, December 1st. Jeff Bezos, chairman, and only have 4,000 network size, much less than your expectation. This is their total compensation, unit in thousands, okay. And Amazon's current CEO is Indy JC, 5,000 network size. This is their connection, it's a compensation. Okay, so this is the real network size can be assessed from Capital IQ. So everyone, if you have the account, you can check that data by yourself. And the others, directors, independent directors that have the other connection, they count all these connections. And the third one, Google. So you guys mentioned Google too. The current CEO is Sundar Pichai, 9,000. Okay, because the Indian people are actually very interactive, very active in every society. This is their compensation. It's the largest one in unit, in 1,000 unit. So this is Google's. So now you can imagine the network size actually is different from what you imagine. This is very solid because we have to calculate the degree, the betweenness, and the centrality. The last one is Tesla, because you can also present the case. And CEO here, most recent data, Tesla ticker. You can see, if using the traders, much more than that, right? But the network size is 5,000 only. It's not the same as the traders followers. How many friends you have, it doesn't matter. You have to have the database in the Bordex. So this is 5,000 only. Even Elon Musk, only 5,000. And this is their compensation, but it's secret, it's too large. Okay, so from here, you know, social capital measured by network-related measurement is quite solid. This is the case that we are talking about the bright side. Social capital can reduce, can enhance value, can enhance the stock price, and may have some value, information, reputation, and corporate governance. All bright sides. But some dark sides also happened. Okay, so this case, similar to what you have presented, the same one. Because actually, it is like a double-edged sword. Can have positive share, but have a negative as well. So this case was Tesla, Elon Musk, to raise his funds using their traders trade. So funding secure trade at that price is $400 more at that time. But actually at that time, they did not pass the SEC application yet. He announced earlier than that. And then being sued, and also the price, I think, is too high. So this is because the social capital is so large, it becomes a negative dark side. So well connected and bypass the legal and the PR teams to speak directly to this network. He treated earlier than that. But at that time, at that moment, not yet done. Also become a smoking gun. And so this is the negative side. Sometimes it creates value, but sometimes it probably create a swap. So this case, they get penalty each from Elon Musk and the Tesla pay 20 millions. I think presenter already mentioned this case clearly. And also interesting, the jury found him not liable for investors' losses. So social capital, in another way, okay, overcome the result. You don't have to compensate for the investors' loss. And history have some controversy and argument was false and misleading investors. Also, this we call the security fraud. Okay, so this is a lawsuit from Elon Musk in 2018. You can find the case on SEC website. It mentioned very clear. After 2 days later, September 2018, right? September 29, SEC announced that it has settled those charges so quick, 2 days. And then only pay a very little money compared with the $420 raises fund per share, and you raise a large of money, and only pay penalty for 20 millions each. Tesla paid 20 millions, and Musk paid the same. But in total, only 40 millions compared with the amount they raises. So this is social capital may change the result to minimize the loss, even though they cannot avoid it totally, but it release a lot of the pressure. So this is the dark side of the CEO social capital case. In this paper, why does litigation risk matters? Because direct legal cost. Usually the legal cost, lawsuit cost is a lot. In America, lawsuit costs a lot. Everyone knows don't go that way because spend a lot of money and it will get the negative market responses. Your stock price will drop, and also the CEO or CFO company, firm's reputation all lost. And also during this lawsuit, manager will be distracted, cannot focus on the operation of the firms. So many negative signs. A shareholder actually will lose the trust, of the firm, especially institutional investor. If you are institutional investor, you will be more concerned about any lawsuit of the firm in your portfolio. So every lawsuit, they will quickly have some mechanism, a trading strategy to sell your stock. So why focus on CEO? Centrality, right? And can better assess the information, the resources. So it's a key person and more reputation pressure. So can be examined and whether the centrality of the CEO social capital can lower litigation risk. So this is a very clear logic. So if you think this way, you might find this topic interesting. And from the literature I just mentioned, have literature review supported value creating and risk-taking behavior of CEO social capital. So a lot of paper doing this, and also some loan contract will be more favorable return. And reputation concern facing public scrutiny, and and then high centrality CEO can use their connection to provide firms with more novel and private information and the resources. So we have this channel, right? And we have this reputation channel too, right? And the other value risk-taking, they can belong to corporate governance channel. So definition, high social CEO capital. This paper defined social capital. What is high social capital? It's high centrality. So your social capital depending on whether you have a high score on centrality, not only the degree. You have many connections, but you're not always the core. So the paper also count the core, whether the CEO core have a higher score too. board access support. So prior evidence focus on the bright side, right? Enhance corporate value, reduce risk, and better start return, favorable loan contract. And downside risk are rare in the literature. Very few people examine the downside risk. Only focus on the bright side value. So this is a research gap that everyone can do. Whether if something happened, social capital can protect something to reduce the downside risk. So the focus on other dimension can reduce the litigation risk. So this is the downside dimension remain possible, including entrenchment and the others' behavior. You have a very good social capital, good social network, but in other way, you will be entrenched the company, so may destroy the value on the other side. So this is the literature map for your reference. So we are doing this angle, and litigation risk only doing, you can do corporate governance also. So this all belong to litigation risk. On this belong to network. Okay, so this paper doing the other side, which is the downside protection story, rather than the bright side. So we do think the paper contribute a lot of connection between CEO social capital and the firm's litigation risk, okay, in Chinese institutional settings. So in China we call 有关系就是没关系 social capital. So you have a social network 有关系是没关系 litigation risk. So in the weak institution settings, this may be more pronounced, the effect will be more pronounced. Hypothesis 1 is firm with higher CEO social capital are expected to have lower litigation risk. And they design this research in different ways. Different channel and different mechanism. Okay, so we can check this mechanism later. Okay, first beginning, you already know the content of the paper. Which mechanism is more persuasive? Everyone may be possible, but for your personal point of view, which one you think that is more persuasive or pronouncing to explain why CEO social capital affects litigation risk? Which one? You may let me know your answer. Which mechanism? Every mechanism exists in this paper, but what do you think? Some positive, some negative, and some result differs. But if you have a C, why you don't have B? I have curiosity. If you pick answer B, what's the difference with answer C? Okay, so most of our audience focus on reputation, think that reputation discipline is the most pronouncing factor that mitigate the litigation risk, followed by resources and followed by information channel. Okay, that's good, but later let us to see the results. Okay, I skipped this one. This is the basic data. So SISMAR is equal to Taiwanese TEJ. So Chinese database is SISMAR, but if you're using Taiwanese data, it's TEJ data. 6,000 more. Combined with another database is a platform for the network size. This network size also include the CEO's employment history, education, social relationship, and the business network. Also, this is Chinese data. Okay, so get into the model and the paper. Dependent variable is the litigation cost. So this was calculated by the monetary claim divided by total assets. As for the social capital, they have a betweenness, closeness, and the degree, also, and the weighted average in total. So they have 4 measures, control variables, and they control Big Four auditor. Okay, so this is the result of the summary statistic. We can see actually very similar, right? CEO betweenness is very close to closeness and very close to degree. Almost very, very similar without highlight which one is much more important. And this is the summary statistic about the litigation cost. Average $1 million, average is 0.022. Maximum is 1.14. So we can see that the median is larger than the mean. So mean most of the cases doesn't have any lawsuit, but few cases may have a large amount of claims, but very few cases. So how to measure this? Direct average distance and the breach position, betweenness and the closeness and the degree. Degree is the direct ties. Closeness is the average distance. And betweenness is whether you are a role and serve as a breach. So take a look at the figure 1. So this is a CEO, and this is the direct ties. So we call the degree. So how many people can CEO reach in one step? So degree is how many people the CEO knows directly. So directly, this is the degree. How many degree you can count, make a submission. And this is count the how fast for the closeness centrality. So what does it mean? If information start with the CEO, how fast can it spread across the whole network? How fast? This is direct, right? But the other, this one is indirect. So I have to go through the first person to second one. And this is the same way. So in this case, how fast the information can spread across the whole network, we have to count the closeness. So it count the speed, how fast. Closeness is how quickly a CEO can reach the whole network. So the calculation using the formula you can see in the paper. This is we count for the betweenness centrality. So which person act like the bridge between two groups? So betweenness is how often the CEO act as a bridge between others. CEO, and then which is the betweenness of this network? That's count one score. So we can see that this is a network, right? And this is the network. But if we combine two networks, have to go through this CO, this betweenness. So your role is not just a direct degree, not just your closeness, also count whether you are the bridge. Without you, we cannot connect both networks. So I do think that this is quite important because you connect to another group. You connected to another group. Without me, separate. So you can see this is not connected. So this is quite important. The CEO connected this group and that group, this betweenness. How often the CEO acts as the bridge between others? So if your network size is larger, you get a higher score. So we can see that baseline results, betweenness, closeness, degree. Of course, degree is direct, right? But close is much more easier. But betweenness is a little lower in coefficient because from the visualization, we can see that the bridge, probably the case will be real. So all significantly and negatively affect the litigation risk from table 2. And from the visual map, we can see the degree, probably more count compared to betweenness, a little rare. And this has heterogeneity test, separate into stay-on or non-stay-on. In China, you know, stay-on is government-owned, inefficient. So it happened, the significance happened only in non-stay-on. Maybe it's private or significant, but only in private, not stay-on. And heterogeneity separate into the economic downturn and economic growth. I skipped another dimension because it's not very significant. Maybe like a table 4 or something. One table is not very significant and consistent. I skipped that table, but I think this table is quite interesting. Economic downturn, only the significance happen in economic downturn, low economic growth. Very interesting. So when economy grows, social capital doesn't mean much because everyone will be a successful business or successful salespersons or businessmen or the owners because of high economic growth. We don't have to have social connection because economic growth. It turned out to be non-significant, not important. But once the economic downturn, social capital become significant. Makes sense, right? So if the stock market going up, positive sensitive, by everyone you will earn money. So not because your expertise, not related to your expertise, it's related to economic growth. So all this special knowledge about stock price will not be necessary. But once it turned out to be a stock price negative sensitive, you want to earn money or make profit, and it's very important for every knowledge, expertise. Very similar logic. So the paper doing corporate governance complement, I think this session was doing good. High only happen in high CEO ownership. But another way, I have curiosity about whether they have agency problem too. Because that means this CEO will be willing to reduce the litigation cost because they are the owner too. And maybe they are the major owner of the company too. So if you find that high CEO ownership only happened in this group, that means there is some agency problem too. So you can think, if I have no CEO ownership and I will lobby to reduce litigation risk, that means another way, right? Because it's not related to my wealth. And this incentive is quite interesting. You also have some concern about the incentive come from another agency problem. And heterogeneity, I skipped the independent directors, even though that the dimension is quite important, but that's not related to the whole story. And then the robustness test, the paper doing this fourth, but only in like a half page, doing a lot of work but very short description. So I know that this is a short paper, economic finance letters, but they're doing the work they have to do. And then some criticism about the DID also. You guys already provide some shock for them, but using Taiwanese data, so we can better use Chinese data during this period, and to find a shock that will influences the social capital, and then we can check the results. So this paper really contribute to the literature review about this dimension, you can learn something from the litigation risk and to develop those dimension for your own. And what I think we can improve the paper beyond difference in differences, actually event study can be done also. So this is another dimension that you can do. And also we can find some very similar case like a CEO turnover shock, right? Change the CEO, whether the social capital change will cause different litigation risk. So you can do this shock too. Very similar to the last case, last paper we introduced. So using the CFO turnover, and then here you can use CEO turnover shock. And also some measurement can be improved. I think your group number 4 presented very clear, okay, tax and the number of lawsuit amount you mentioned, regulation penalty is another one. Okay, that's all proxy for the dependent variable rather than 0 and 1 or the ratio. The other proxy can be employee. And better mechanism, we can use like a corporate governance, right? Board monitoring channel, because they do CEO ownership, do independent directors. So I think this could be a very good paper writing to add. This is a board monitoring channel. If you do another heterogeneity, you can use the other channel too, mechanism. So, yeah, I will not ask this, and I will not ask this, but I would love to ask another one. Yeah, here. Can you please to vote the final board? Because the last two, we don't have all the, we have a reputation information. We don't have this one, and I don't have this one. But after the whole paper, whole picture, did you change your mind? What is the most important result? Is important explanation for the negative results. If you change your mind, then we will have different result. Last time you have a 1, 2, and now I have 4 choice. Maybe you say, I don't think any of them is convincing. I find the different answers now. So most of you still focus on reputation channel, followed by better information. and resources. The channel. Very few focus on ownership. I have curiosity because if it's me, can you guess what I prefer? Which one? Huh? I would prefer ownership or complementary. Because only these have to further heterogeneity. High CEO ownership, independent director. The others, like information channel, reputation channel, they did not do any further heterogeneity test. So I would prefer these answers first. Okay, and then other than that, we have a very good discussion. And today you will learn this in total and take away and to have your reference for review and to do further research if you are interested in. Okay, so the baseline and the heterogeneity and the channel, the mechanism, and combined with your hypothesis, consistent, okay? And today's class, we will end here. And thank you for your presentation and the participation, okay? So next week, remember the database collection. If any data have problem, write email to me. And I will teach you how to run your paper in final version. Okay, I will see you next week, right? Yeah. Okay, I will be here. I'm here.